Hey traders, welcome to another episode of Charts and Coffee. Happy April, everybody. April 1st, kicking off a new month, kicking off a new quarter. I am super stoked for what we've got coming up this month. I love the way the markets are structured right now. I don't know that we have sort of the broader trends that I would love to see quite yet. It's hot, but I am ready to. You got it. I'm ready to get after it. So let's kick it off here. Great to see everybody. All right, so let's kick it off. Angry Armadillo. That's quite a list. Let's take a look at a couple of them. I probably won't go through all of them there, but thoughts on KTOS, TBT, ARCG, Moss, AMD for 416 and 49 expiration. So I don't typically play the expiration game. I'm aware of the volatility that it's going to create. We know it's going to be elevated, but let's take a look at AMD because that's going to be one I think is not necessarily one I'm interested in per se, but it definitely reflects an overall sector that we want to keep an eye on. So I like this one a lot, Angry Armadillo. And great nickname, by the way. You have Angry Armadillo and I've got Salty Raghee, so I love that. We are simpatico. So what do I like about AMD? Actually, not a whole heck of a lot, but I like what it says about the potential for a break to the upside. Not my favorite kind of 1, 2, 3, but it is forming potentially a swing high breakout as we take out 84.75 to 84.80. Now, what does this actually say more in a bigger picture conversation? What does this say about the SMH breaking out of this, again, 1, 2, 3 here? And again, that's not a perfect 1, 2, 3. I like to see 52-week highs and lows. That's really the more classic, traditional application of that Dow pattern. However, there is some logic to taking out those swing highs when that 1, 2, 3 forms. And if we can take out a volume ledge at the same time that we absolutely did. Look, I think one of the parts of Dow theory that is not talked about enough is the fact that he wanted moves confirmed with volume. So if you want to know how I've been trading the market for the past 3+ decades, 34 years as of this year, look no further than Charles Dow. Almost nearly, I can't think of many exceptions. Everything I do is rooted in some way to the 6 major tenets of Dow theory. So giving credit where credit is due, Dow decoded this stuff 100+ years ago, about 140 years ago in the late 1800s. So it's our job to, just to recognize we're standing atop the shoulder of giants and then look at the tools and modernize them. Realize that the Dow didn't have to deal with block trades, right? So these are things that we adjust, but we don't have to reinvent the wheel. It spins just fine if we can look back in history and see people who discovered these things in the markets over a century ago. So that being said, we liked semis, in our Sector Secrets Mastery back in January and February. And then you guys know this was the Charlie Brown and Lucy, football move there with everything just rolled over tech-wise. But we know that there's a worldwide semiconductor shortage. We know that this is going to be at the heart of it. There are 2 names that look really good within SMH, and it's Intel, which is my preference, and the other is AMAT, which has taken off recently, but we get a pullback. Definitely those 2 are your relative outperformers in the SMH. So thanks as always for the questions. All right, moving on to LNG. Gregory, do I have any thoughts on LNG? So this is a natty gas related conversation with Shanir. Do I like it structurally? What's not to like? Really, I can look at the underlying. Now, this is not a relationship that's like, say, Freeport-McMoRan and copper, right? So I actually like LNG in many ways far better. We like energies. And this is very much part of the reflation trade. Hats off for keeping an eye on not what the NAS and the S&P or the Russell are doing necessarily, but where are those uptrends still in this market? There have been plenty of uptrends in this market that have cared nothing about the rollover in tech. And that's what I've been trying to recommend people focus on. And I think you've got a great reflation name. So, I've got my Diamond Hands shirt on today. So yeah, this is the kind of double green that you diamond hands in many ways. I'm very excited about what April's going to give if you're looking in the right place. And Gregory, absolutely, I'm with you there. What are my thoughts on Amazon? Hey there, John. I've again kind of not been thinking about Amazon all that much. Not in any way to be curt, but why? Like, who cares? I don't care about tech right now. We have yet to take out the swing highs. I mean, clearly NAS is heading higher this morning as we escape the first quarter, as we escape the month of March. But until we take out these swing highs, the NAS is up. It's chopping around. I think that this NAS setup, by the way, was there a setup here on the NAS? We talked about this last week in a free video where I said, look at the Darvis lows sitting between basically 750 and 680. That was precisely the zone that I talked about in the free video, because I had so many people saying, what about the NAS? What about the NAS? What about the NAS? And I'm saying, forget about it in my best good fellas. But the fact of the matter is, sitting at those oversold lows, that was about the only spot that it made sense, as long as you were willing to look at those volume ledges, willing to look at those Darvis levels, and sit through that trough before the market goes up. Heading up now, I'll let those Momo folks chase that, because we want to scoop that up at the bottom of the range. So sort of what's the mantra? Long from lower, right? Long from lower. I know long from higher feels good. It's what most of the marketplace does. Most of the marketplace, 80% are a bunch of Momo players. There's nothing wrong with Momo, but you got to know what you're doing, because it's a different kind of engagement. You're going to pay up. You're going to have to chase a little bit, but you're going to have to do it early. You're going to have to find those thresholds early, so you're not chasing the party too late. And, it's like a high school party, right? You can get there kind of early-ish, have some fun before, one of the neighbors calls the cops. This is kind of close to that point as far as I'm concerned. I would be proactively looking to scale out, go to break even in front of 13.3. And that's exactly what chop behaves like, right? So why do I talk about NAS if we're talking about Amazon? Well, then we take the next step lower, kind of get more granular. XLY. Are there better players in the NAS? Are there better players in the XLY? Look, Tesla and Amazon are the reason I think XLY doesn't look as good as it could. Could Amazon start moving up? Yeah, of course. Staying above the 200 is great. I think breaking above the mean on this VWAP would be a terrific start, but that's not going to happen until around 3170. So again, I have to just, again, this is the way that I look at the market. It may not be for everybody, but gosh, relative outperformers are everywhere. So, why would I look at stuff that's sort of lagging and holding everything back, stuck in chop, or worse, heading lower? I know there's a bargain hunting mentality, and that to me is still a smart way to look, but that's going to be a longer term time horizon. And that's usually going to land in my portfolio. It's more of a portfolio mindset. I look at my portfolio building like a giant Ferris wheel. I'm not going to build my portfolio in names that are at the top of the Ferris wheel. That's more my trading book. I'm going to look for names in my portfolio that are, for example, just to give you an idea, Rog, what does that mean? XLE and XLF were a great thing to add to my portfolio last Q2, Q3. Now they're trades. So could Amazon and some of these troughs be longer term time horizon type setups? Weekly time frame, probably? Yes, but for me, the trade is a different conversation. GGB. GGB. I haven't looked at this. This is the first time. I don't have a read on it. I wouldn't be short. So let's at least eliminate one side of the conversation. I sure wouldn't be short, but I would like to see a little bit better structure here before I do anything. But, interesting looking potential name, not double green yet. But again, as long as we can eliminate one side of the trade, meaning, if you can look at a chart and say, well, I could be long or I could be short, move on quickly because you don't have an edge. It's impossible to have an edge, the edge, when you say, well, I could be long or I could be short. So move on. Until a chart looks like a hell yes long or no short, don't play it. So to me, this is potentially looking interesting, just not there yet. So what's my take on oil? Bullish, bullish. Even more so than oil, whether you're looking at USO or CL. I like RBOB even better. I like RBOB gas even better. Traffic data supports this, the reflationary environment. So when people talk about macro, what are we talking about? Right? Right now we are in a reflationary environment. So when people talk about macro, most of the time they don't know what they're talking about. They're talking about fundamentals and they're talking about headlines. And that is not macroeconomics. Google macroeconomics and you will see inflation, GDP, monetary policy, money supply, those bigger factors that all those other things will fall underneath. Follow macro correctly. It's actually not that difficult. And you won't get timing, but you'll get this overall weather report. Right now, the weather report is saying 80% chance of sunshine. If you know where to look. Reflation is where we look. And Tomic, yes, I love what oil looks like, but I like even more what RBOB gas looks like. So that's UGA, that's USO. That's the reflationary trade. It doesn't need the dollar to move lower. A lot of folks are wondering, Rog, US dollar's been strong. You're right. But this does not need, because crude's really interesting. It gets to toe the line between a little bit of this reflationary environment and also this reopening narrative. Is a reopening narrative macro? No, but the down the line, what could result and in the way that it reopens that's more fundamental data. But the reopening, and the macro together, that's a great, twofer that you've got there. And it's not going to just be oil, Tomic. It's going to be oil stocks too. It's going to be oil stocks too. All right. Yeah, I'm with you. UGA looking very good. And that's just the ETF alternative to gas. So fantastic. So you guys are getting it. I mean, I love the questions that I'm seeing. And I've just noticed the questions that we've been getting as we've been doing Charts and Coffee now going into its 6th month. So maybe 7th month. I'm trying to remember. October, November, December. Yeah, we're going into our 7th month. So yeah, we're definitely seeing, again, the same thing we talked about last year. Last year was, how do I set up infrastructure and the potential for a reflationary trade and deal with the end of year shenanigans? Now we're just full on looking at the reflationary trade, waiting for the indices to catch up. But there are plenty of trends. It's just, you're not going to see them in the broader averages. And that's the way we've been building out our watch lists in the Sector Secrets Mastery. So come check out what we're doing there at Sector Secrets, simplertrading.com/sector. All right, moving on to, let's see, CLF. Let's jump on over there. So daily, so when something takes off like this, Matthew, I'm sure there are folks that like to play this. It's never going to be me. So I don't want to say there's not a play there, just not for this trader. So we left a nice volume ledge that we were stuck in and trading around for a while. But I will tell you, now nor then would I have had a setup here. And so I think it's really important for someone like me to say is know your pitch, right? If know your pitch doesn't resonate, stay in your lane. And this is not my lane. My lane is trend trading. My focus is the dominant trend. My focus is directional bias. And again, if I can't find that clearly, and the same way we're going to do it when we start day trading this morning. We day traded the day before the end of the quarter, so the 30th. Excellent day trades, looking at those trough lows, easy peasy. We went, long the Dow for a quick pop with some options. Same thing with the QQQ, and then we rode the Russell. What do? We looked for long onlys. Remember, if you want to make your broker rich, keep a long short approach. Long short approaches should be something you eventually get to, right? Don't start there. If you can't find directional bias, and I'm spitting some hard truth this morning, aren't I? Kicking off April, a little bit of salty Raghee here. don't start off as a long short day trader. It will burn you. Every now and then you'll have a great trade, but it's gonna basically take you out of great trends like the Russell, which was what, 40, 50 point trade we had in the futures room on Wednesday. Sorry, on Tuesday. What did I do yesterday? Almost nothing. It's the end of the month, end of the quarter. It is a caution day, right? We don't overtrade on a Wednesday. And I think one of the things we talked about, and some of you, I don't know if we talked about it in Charts and Coffee or not, but I know we talked about it in the room, which is the end of the quarter is different than the end of the month in that end of quarter acts like a very compact window dressing session. The beginning of the session typically has some window dressing. The end of the session typically has an unwind. Why? Because, and believe me, window dressing happens, gang. So what happens is you've got a lot of market, portfolio managers and whatever, people who manage other people's money. They're going to be basically puffing up their portfolios, looking like they've got less of what didn't perform and more of what, performed well. Oh, say it isn't so, right? Of course they do. But what you'll see is everything is going to be supplanted. So you puff your portfolio up and then you dump the things that are underperforming. And voila, at the end of a quarter, you've got a beautiful looking portfolio. It's all a sham, of course, but this happens. And you'll see that window dressing rally that we typically see go over the course of weeks at the end of the year happens in a session at the end of quarters, especially with this thing. It's added a whole new element. This is the 10-year note yield, okay? When this thing started moving higher, it just, lit the fuse on what is always an interesting time of year, and it just lit the fuse on that end of quarter. All right, Starbucks, interesting name in our XLY. Is the structure as good as I'd like it to be? I can't say that it is. But with that being said, I don't want to short it. So let's always start with, do I want to short it or do I want to buy it? What don't I want to do? I don't want to short it. Is it one of the better relative outperformers in the XLY? I would say no. I still like Ford and GM a little bit better, right? But, people are asking me about names like Nike. I don't like Nike. Names like Starbucks, I like that better. Names like Amazon, again, all within this XLY. Names like Tesla. Look, I know Kathy Wood has that 3,000 target. And again, remember, she's got a longer term time horizon. Her time horizon's 5 years, 15% per year, double, right? She's always looking for those doubles over the course of 5 years. Interesting that they came out with this call as Tesla was in a move lower, but Tesla still has yet to take out some of these swing highs. I wouldn't bet against Tesla long term. Remember that if you're playing the long game, like they are over at ARK, and let's face it, we got to talk about ARK when we talk about Tesla, probably the most impactful analysis and flow that comes into this name. Do you think she's the least bit concerned? You think she's looking at a 15-minute time frame? You think ARK is looking at a daily? Probably not even a daily. Look at that weekly. Not much to worry about. But if we're trading, right, we're looking at days to a couple of weeks for positions. This weekly really is going to be most of the time very misleading. I don't find that the precision for the entries are going to come from that weekly, or heaven forbid the monthly. You'll get an overall trend, but remember the kind of range you've now got to navigate. It's not one that a daily is always going to be able to properly allow you to have a reasonable risk reward on. So I hope that makes sense. Do VWAP and V-score tools work in FX? No, not really, Fernando. No, because they're volume-based tools, and volume is not something you can rely on in an off-exchange market like Forex. Yes, you'll find volume, but it's not all encompassing of all the banks, institutions, and corporations and everyone who participates in the off-exchange foreign exchange market. It's got to be exchange-based. So you will find volume, but it's not going to reflect the big picture of what's happening in that, $4 to $5 trillion market. All right. So with that being said, last question. I do like financials. We're long financials. All my cards on the table. The question was about JP Morgan. I will prefer to play, Mac, I will prefer to play XLF or just because I get better bang for my buck in terms of the cost of the option. But the second weighted name in XLF is JP Morgan. So here I have sort of a twofer. Well, more than a twofer. I get to play that entire financial sector. And by the way, while we're talking about financials, I like those regionals as well. Okay, I love the KRE. All right, gang, and that is it for today's Charts and Coffee. Again, happy April. Thanks for joining us. Gosh, this cup of coffee is hot. But all right, gang, new quarter, new month. Let's get after it. Be good to each other, gang. I'll see you tomorrow.